Satish Konidala is asking that I'm aware of, in REITs, I'm aware of dividend risk and capital risk due to demand supply of stock. Is there a management risk or bankrupt risk by taking new loans for more development? Is SEBI or REIT trust set up good to monitor these to protect us? What allocation do you recommend between debt and REIT for monthly income? I would say keep off from REIT for now, because the market, we have very few REITs. They're still evolving. Even the regulators are learning how to, it has taken a couple of years for it to tweak the regulations so that the first REIT could get going. Most mutual funds have actually enabled a provision that they can invest up to 10% in REIT, but I don't think they have really embraced it. They haven't gone about investing in them. So hold on, let it evolve, because REIT, this is going to be a big ticket investment. It has to be meaningful. And then the added risk is, there is one risk which is very inherent to REIT, assuming that there is no redeployment and a redevelopment, more development or investing for more development. I think, it depends on the prospectus. Different REIT offer documents have different provisions. It might have an expiry, or it might get into, newer development or not with the residual money. But the primary understanding of a REIT is that here is a closed-end structure which owns assets, and the rental income derived by this vehicle will be given to you as a cash shield. And hopefully, in the life of the fund, the financial worth of the assets which is producing this income, which is producing the rental income, will also go up in value. Development is generally not a very significant part, or is not a very prominent part, but let's see how it evolves. But I don't know, the expenses, the lack of occupancy, and and this is a threat which has become real. This is not a threat. This was not an understandable threat some time back, but ever since this pandemic and the crisis, I think it might be real, and it might have a very significant impact. And that is the kind of thing which can be, which is true even for a landlord. If you are a small landlord with you live in a floor, and you have rented your house, and if you don't find a tenant for a while, then your income disappears. So in that sense, even though some of the commercial real estate lease contracts are for a long period of time, but businesses change, businesses go, get into a poor health, or there could be a demand supply equation where a lot of tenants will be willing to move on to a relatively cheaper alternative. So I would say that all those risks, all the market risk, all the underlying business risk very much prevail. So let it evolve a little bit. I think it is these are early days for an individual investor to look at it as an income vehicle.